And today's topic is really, really important because a lot of employers, or if you are your own employer and not knowing how to do this ERC credit, and I am going through that in 30 minutes to make you do it yourself. Okay. Yes. I mean it. So you do it yourself. It is really not that hard. Okay. Of course, not to say that I'm pushing you away from working with community CPA. You of course can come to our firm, but it can be done on your own. So let's get going. Let's talk about this ERC. And I want you to realize that the ERC amendment we had on December 27th and had amended the ERC that came out on 2020, March 27th. So I want to quickly go through the March 27th. So number one, the ERC stands for Employee Retention Credit. Employee retention credit just means that if you file 941, you have a possibility to claim ERC credit. Okay, ERC credit is a refundable credit. That means it doesn't matter you pay taxes or not, you're gonna get it. Okay, there's no such thing about refundable credit and you don't get it, so you get it. Okay, now the original CARES Act gave the period from March 12 to December 31st. So that is one period. The amended one, the Appropriation Act, that one started on December 27, that extended this December 31st, 2020, all the way to June 30th, 2021. Okay, and now qualified wages. Qualified wages are the wages you paid in a quarter period, plus not just the wages, plus the medical insurance that company paid. So if you are one employee organization, which that one employee is yourself, you are S corporation, you pay yourself salary, and you also have a medical insurance that you pay. And folks, just remember that qualified wages is including employer paid health insurance. Now, they say if the government order shut down, or read that, or there is an or, right? Did you see that red letter or? That means if government didn't shut you down, but your gross sale went down, you also qualify. So the way they calculate the gross sales, and in the CARES Act, it says 50% down. 50% down. And look, down 50%, and didn't say equal. So if you just have 50%, you don't qualify. But if you have 50%, 0.001%, you qualify, right? So then there is another thing saying that this qualification will go on until your sales went back up to 80% of the comparative quarter, which is the same quarter of 2019. Okay, so I will give you an example, then it will make it more clear. Then this credit goes 50% of your wages and up to 5,000 per employee you can get back. So back then, the CARES Act says that if you get PPP, you don't qualify. That's what it says there. Okay, so now let's go look at the calculation. So 3 employees in the company. At a wage, one is paid 20,000 a year, 40,000 a year, 120,000 a year. The gross receipt dropped in each quarter of 2020 compared to the same quarter of 2019 is 10%, 55%, 30%, and 18%. So quarter one, and quarter one, remember this thing start on March 12, not from January the 1st. Quarter one doesn't qualify anyway, unless the government will shut you down for the 12, from March 12, and you have a shutdown period. And so this quarter one, in my example, we don't qualify because we didn't drop that much. On quarter two, 25%. Sure, 25% drop. that qualified, right? Is more than 55% is more than 50%, right? Then on quarter 3, it dropped 30%. That means it didn't go up to 80 yet. Am I right? It is still at 70. So quarter 3 also qualify. And the quarter 4, 18 doesn't qualify anymore. ERC qualified quarter 2 and 3. So look, how do you calculate that? Q2 ERC refund equals to that 20,000, that employee, each quarter is how much? It's 10,000. Am I right? 10,000 times 50% is what? 10,000 times 50% is 5,000. Okay. 10,000, 50% is 5,000. And then, no, I'm sorry. 20,000 divided by 4 quarters is 5,000. 5,000 a quarter times 50%. So that is your one calculation plus 40,000. 40,000 divided by 4 is 10,000 per quarter. And each quarter is 10,000. If we times 50% is what? 5,000. So I put 5,000 there. Then 120,000 this person. And this person is also have 12,000 you divided by 4, but they only allow maximum 5,000. So anything over 40, it is the same. So I put 5,000. So here I have 12,500 and ERC claim that qualified refund. Okay. Now, right here, I will show you a form later on at the on my last slide. I will tell you how this 12,000 reflected on 940 forms. I'll give you the number on the form so you can do. And quarter 3, remember quarter 3 also qualify, right? Because we didn't go up to 80% yet, it's 70%. So now quarter 3 ERC refund, and still the 5,000 times half, because on the third quarter, I have 5,000 for my first employee again. On the last quarter 2, I only did 2,500. Now I still can do another 2,500 because 5,000 is maximum for the year. I'm not at maximum yet. So I got 2,500. So with this example, we got total of what? We got total of 15,000 refund from the ERC. So you file amendment for 941, you get this money back. Makes sense, right? Now, this is the CARES Act. This is how ERC credit for 2020. And remember on the December 27th, this came out with amendment. They changed the range from March 12, 2020 to June 30th, 2021, right? There's a different rule. So let's look at what happened to 2020. So this is 2020. We just talked about it, okay? Everything is the same, except now if you have a PPP, you still can apply. The only thing is they don't want you to claim the credit on the quarter where your PPP money is being used. The only difference. We're clear, right? We're clear. Now, let's look at 2021. 2021 is not the same as 2020 they were talking about. So the date range on 2021 is only for first quarter and the second quarter. So the qualification also has 2 things, but they're not and. They're not qualify 1 plus qualify 2, then total qualify. They're saying either 1 or 2, whichever. You qualify, okay? So number 1, the period 1 government order in force that affected your business operation, your supply capacity and your hours. See, if you have interruptions from government order, that's one condition. Number 2, each quarter whose gross receipt is less than 20% of 2019, same quarter. Okay, not 50%. Remember we talked about 50%? that is still applies for 2020. But in 2021, it's 20%. And don't get confused with PPP requirement. PPP require you to be what? 25%. So this is 20. So those people who couldn't qualify for PP2, and because they kind of reduced between 20 and 25, here you go. This is where you're supposed to come. Okay, and the through the quarters whose gross revenue is less than 80 of 2019 same quarter. So it says that if you are lower by 20, but the next quarter you still lower by 20 and you didn't really match to the 80% of 2019, and yes, you continue to qualify. So you may qualify for 2 quarters. Okay, now the employer who received PPP has limitations because let's say you got PPP in the right now, but you also qualify for ERC right now, then I would use PPP dollars in the second quarter instead of mixing into the first quarter while you are applying for ERC. So planning, hey, planning. And who said planning is not important? I always tell our folks that, in the financial world, in the tax world, if you spend time and money to do planning, and you for sure will be wealthy just for that. Because if you don't plan, you just pay, and you think you should pay. I mean, we have our President Trump don't have to pay taxes for the rest of his life. And he obviously is not the poorest person on earth. So in fact, he's the most wealthy person on earth. And we're talking about planning. I am pretty sure he has genius accountant around him. Not me. I'm not so genius yet, but I'm learning. So now let's look at so this is the 2021. So let's look at example. I know you love examples, okay? So 3 employees, same thing, 20,000, 40,000, 120,000, 3 employees. And the gross receipt dropped, and the first quarter dropped 21%, second quarter dropped 15%. So ERC qualified for the first quarter. And they use PPP2 to pay wages in quarter 2. I got PPP2, I'm going to use that on quarter 2, so my quarter 1 qualify for ERC. ERC for quarter 1, this is how we calculate. 20,000 is the annual payroll, so 1 quarter is 5,000. 5,000, I will time that with 70%, not 50. This is the other change. They raised from 50% to 70%. So 5,000 times 70%. Then my 40,000, that one, each quarter is 10,000 times 70%, it becomes 7,000. 7,000 is a quarter maximum, okay? So of course my 120,000 would be limited to 7,000 again. So my total refund for quarter 1 is 17,500. Now, what if my quarter 2 is also down and I need quarter 2 again? So here is the core difference. So let's say our quarter 2 is 21% down, we qualify. So we continue to claim quarter 2 and know that your quarter 2, and remember in our first example with the 2020, the year maximum is 5,000. So when we came down to next quarter, the other 2 people don't have any credit anymore because it's used up, right? But in this case, folks, look, he's still getting 17,500 because that 70,000 is limited by every quarter, but not by the year. So every quarter, your maximum is 7,000 per employee. So what if in your company, everybody is paid above 40? Then the math becomes simple. It's 7,000 times every employee. That's how much ERC credit is coming in. Okay, so now your total ERC refund for the year would just double the 2 quarter. All right. So that is how the difference is between 2020 and the 2001. So there's more little things I want to mention before we go on to the form. So here, I need to be really watching my time. I literally don't have time. Okay, here, I saw. Okay, if your business started in the third quarter of 2019, so when you work on 2020 and the first quarter and the second quarter, you go, whoa, I have no quarter to compare to. And in that case, the act allow you to compare to your first quarter when you started, even though that's the third quarter. So you would compare your 2020 first quarter or second quarter to your 2019 quarters for the first quarter, second quarter. Make sense? So that is how you can use the quarters in 2019 if your business happened to start in 2019. And there's also safe harbor rules allow you to compare the immediate quarter to the quarter that you're saying you dropped. So if your business started in the first quarter of 2020 and your business drop in 2020 second quarter, and the safe harbor rule allow you to compare to the first quarter. Okay, so these are just, small things, but can be big for some people with a special situation. Now, let's look at a 1040. And the example I have is actually a real example for one small client that we have. Of course, I take away the identity, but it is a real form, because I think that will really get to the point and you will really know how to do that, right? We're talking about doing it yourself. You can't be like, oh, I don't know. No, you do know. You have to. That's what we are doing here. Okay, so I will. I think you're still looking at my screen. Kat, can you confirm that right now 941 is showing to my audience?
Yep, that is it.
Okay, so I am looking at a original 941. So one is the originally filed without ERC in play. So this is the third quarter of 941. And look at this, and the wages and everything, total 6190. Okay. Obviously, nobody going over the threshold. Nobody is paid more than 40,000 a year. So I have the total is here. And notice that I have a social security wages here and Medicare wages here. It's all normal. This is like, for some of you, that's my machine does that, Ying. You don't have to show me this. I know what you mean. And this is my 940. Good. Very good. This is what I want you to see. And so you know that it is just your 941. But now to get the credit, you need to do this. You need to file a 941X amended. How do you amend that? And that was just a cover letter. It's not important, but look at this. And so I am amending 941. I am amending the third quarter. And this is me, and this is my address, and this is my my EIN number. And folks, just check box 2, check box 3. And don't ask me why box 3C, why 2. Don't even ask, just do it. And so you are going to check 2, check 3, because this form was designed as so appropriate. So there is no correct answer for you. And you just do the C, the 3, and the 2. And after doing that, come over here. So in this second page, this is actually the second page of the form. And you will see line 18. I needed you to calculate what we call the non-refundable portion of employee retention credit. You will say, well, Ying, what are you doing? You make me so confused. You never mentioned about anything like this. I didn't mention this because it'll be too much detail for you. But right now, I just want you to write down on your amended form, you need to take half of this number, half of 767.56. This is your original 941. The Social Security, I need you to take half of that amount over here. Just put that in there and put a minus sign over here. Okay, let's go. Then we come over to line 27. So what is line 27? Line 27 is 50% of line 30. What is line 30? Line 30 was our original total wages, right? So now you have this. And 27 is half of that. And what is this 26? So 26 equals to 27 minus 18. So you put in 2711.22, and this is a check you're going to get from IRS, not SBA. It's not the same as PPP. It's IRS will give you a check with Statute of Liberty things on it, or direct deposit to your 941, and for that amount. Okay, so I'll go back to review this form with you one more time. 941, original filing you did on the third quarter. And remember, I'm doing 2020. So if it is 2021, and you don't need to do amendment, folks, because you haven't really filed the first quarter yet. And on the first quarter, you will just not pay taxes. You're going to get money back if you file ERC. So I am talking about to amend your 2020. So that is a 50%. Remember, you have to have a governmental shutdown order impacting your business, or you have to be 50% more down from prior time. Okay, remember those rules? But you got PPP, no problem. Remember? So that one. So 941 2020, right? So this is the original filing. The key number is total compensation. And you are going to say that, whoa, Ying, you told me that, health insurance is supposed to be in here. And that's why, this number doesn't have the health insurance number. I don't know what you're doing. But if you are doing your W-2, if you're doing your payroll right, it's actually in here. Okay, so you need to make sure that your payroll item setup is correct. And otherwise, if you didn't set it up correctly, don't try to change that. Just use whatever you have on the original 940 form. So now two numbers to pay attention, this number and also half of this number, 767.56. Then you come to the amendment. And amendment, everything is really simple. What really gonna get you dizzy is on part 1, you need to select 2. On part 2, you need to select 3. Then you come on down here, you select C. And really, if you read it, I promise you, you'll be very dizzy. It's not even in Chinglish, it is in French. And in the kind of French that even Canadians can read. So I don't know how it worked, but don't ask me how we figured it out, because I did ask IRS. Anyway, here on this page, you want to calculate your 18, line 18 right here. This is the half of the Social Security Medicare, because you need this number to figure out how much of that doesn't come back to you. Then you go down to next page. You already know the total. You divide it by half. That's what you're supposed to get refund. But because of your line 18, so you only get the balance. Makes sense, right? So this is it. This is how you amend your ERC for 2020. And really, I think that you really can do that yourself, but make sure the qualification is properly documented. I mean, every time one business dabble into the federal funds, and then you ended up getting be compliance reviewed, and people want to see how you do your book, and those are very normal. That's just part of we're getting the federal funds, and so the federal government scrutinize you, and is normal. So for you, just make sure that you have all your ducks in a row and you prepare that, right? So I think
this concludes our doing yourself. I really think this should offer you some really clear thinking. I don't have any question answers coming up, so I think we're good. What do you think? And let's make sure. And when you go back, you look at your qualification number one, and then you look at your filed 941 and pull out 940X, 941X, and start pencil that in if you don't do it electronically. So uh, for our own clients, when they have these kind of things happen, we actually do that for them electronically. So it is not really a paper filing process, but it's absolutely doable on the paper filing. So just so you know. All right. And thank you for coming to Community CPA's webinar. And go on to YouTube, support us. And I want to see our subscriber going over the roof. We only have about 688 subscribers. And we even have clients over 10,000. I don't understand why my clients are not getting on YouTube. And tell your friend and spread the word for us, because we're really our spirit is right. We really are here for you, and we want you to do well. And regardless you're our client or not, and in the business community, we are one family. So I hope to see you at some point of time, and continue follow me. Bye bye.